Hello again, accounts people. Back to our Finance Act 2024 practice paper. Let's finish it off with tasks 7, 8 and 9, all capital gains orientated, one of which is shares, but it is technically capital gains. So this one's just a knowledge one. Do you know the rules? Nothing much to help you, because this is all you get in the guide. The tax rates and the annual exempt rate. So lots of knowledge to be learnt for 3 awkward sometimes tasks. So let's have a look. An asset to your grandfather. Grandfather is connected. So deemed means the market value. Another way of saying the market value. So you treated that. An asset to the wife, no gain or loss at the moment between husband and wife, or wife and husband, or whatever. It obviously the loss or gain will be when they sell it on outside. Otherwise you'd sell stuff to your husband and wife and back and whatever, make losses and gains all the time and end up finding a way of paying no tax. Sarah sells an asset to her friend, so that's unconnected when it's worth. Taxman can't do anything about that. Actual proceeds used, she got £1,000 for it. The fact that it's worth, or who says it's worth, it's only worth that amount of money if somebody pays £8,000 for it. And then this one, again, so an aunt doesn't quite count as connected, not quite on the connected list. Market value, so again she's giving it away cheap, but again who says it's 30,000? It's only worth £30,000 if somebody's willing to pay £30,000 for it. There we are, nice and easy, but knowledge, make sure you know the market price and the rules on connected people. So Andrea, so bought it for 16,000. So bear in mind that you've got to know the grid for chattels, the 6,000 rules, and the marginal relief. You've also got to know about allowable expenses. So she's sold it for 24,000 minus 4%. Oh no, hang on, no, 4% when she bought the asset, and 7% when she sold the asset. And these numbers include all the common errors that you can make. So without the 4% and the 7%, we know that would be, that's 8,000, so we can definitely not, because that's got neither the 7% or the 4% involved in it. So let's do some sums then. Okay, so the 16,000, she's bought it for 16,000. It doesn't say inclusive, so we'll assume we're going to add it to it to get 16,640. So that's what she actually paid for it. And then 7% when she sold it has got to come the other way, because she sold it for 24,000, but she's lost 7% of that. So she's got 20. So we had to add the 4% to that to get the cost, and take the 7% because it's 7% she won't be getting. So all we need to work is the difference. Well, I'm not going to waste time on a formula. And so we got that answer. It's almost a numerical question rather than a knowledge one. Holiday cottage, 2014, 240,000. An extension counts as capital, so that makes it 285,000. Sold it for 260, so she's made a loss, hasn't she? 285 minus that was it. That's a nice easy one. All you've got to do is know that it's an extension, not redecoration or anything like that, or replacement furniture, which wouldn't count for capital. It was still there for she'd make a profit if that 45,000 didn't count, which is one of the answers, of course. So what's the wording? Replacement kitchen, 45,000. wouldn't count. Then she'd have made a gain, but that's okay, it's an extension increasing. And again, so no help whatsoever on these questions in the reference material. You have got to know these. You've got to know basically the wasting chattels rule, essentially. So antique vase, it's lasted more than 50 years, so yes, and it should last longer, hopefully. Buy to let property, yeah, that's chargeable when you sell it. A boat isn't. Forms of transport aren't. Quoted shares, yes, you pay capital gains tax on it. Unquoted doesn't make any difference. That means it's a private limited company. Government securities, though, they're exempt. Cars don't normally last 50 years. That's okay. And a field is chargeable, land is chargeable to capital gains tax. I'm sure you've done some calculations where it's A and B. Somebody sells off half a field. Lots of students detest those questions, but they learn the A plus B rule. Right, task 8. So shares, another grid one. 3 grids, except of course we know we really should put a pound sign in the right hand column. And it's probably best to do this one. It isn't as fixed as the other one in terms of what you really should be putting in here. This one's relatively easy. It's a bonus issue, so you get more shares without actually paying out any money. How much loss or gain? So 20p a share. Is less than you paid for the original bulk, but the free ones will make a difference. So let's start off with, well, why not? Again, you've got to know these rules. 60,000, and it's £15,000, 25p a share. Again, you could put the date in if it helped or if it mattered. If you had a split disposal or something like that, you'd need to start thinking about so that's a 0. If it was a rights issue, there'd be money involved. Yeah, so 64,000 shares cost £15,000. Disposal. Right, and he sold 14,000. So as far as the pool's concerned, what are they actually asking? Make sure you've got the numbers clear that they want. The balance of shares and the value to carried forward. Calculate the loss on the share, them in the disposal. All workings must be shown in your calculations. Okay, so the disposal then. Right, so the 14,000 will be the at the relevant price, which is 3281. I need to carry forward. It doesn't actually say whether to round down or whatever. I'll just stick it in as 321. So and it would round down as well anyway. So then we've got this is 50,000. Should really be writing these out a little bit more detail, and that's what's left. So now I'm just going to leave a row basically. Cost, we know the cost, it was the 3281. So I suppose we could show that one 14,000 because we didn't write it in full. That's the 3281 figure, and then loss, because if you work it out, it was still over 20p a share, so we know it's a loss. And then it will be, what did they get for it? 3281 minus 20p a share, 2,800, so 481 a loss. And that's enough information to earn all 8 marks. So last task then, still on capital gains, but we are now on some numerical calculations rather than the theoretical ones. Do take note of what the examiner says in the reports. So we've got a capital loss brought forward of 3,000, so that's okay, we can bring that forward. Sold an asset for 24,000, was worth 7,000. But we know that 5,500 is what matters. So we can do, so box by box, they're actually asking us nice easy here. We can take the full 3,000 off it. And so once we do 18,500 minus 3,000 minus another 3,000, because that's the annual exempt amount, so take 6,000 off. So if you're feeling confident, loss to be carried forward, well now we've relieved the loss in the current year, so there's no need to carry any loss forward. And now one that needs bits of paper and months and all sorts of stuff, just as a last numerical question, although there is an answer down here as well. We've just got to work out what the rules are on occupation and non-occupation for a property. So what we're going to do, again, there's no help. You have got to know the rules and when they apply. So the last 9 months, that's easy. Obviously we know when he was actually living there as well. That's the easy bit. You get it gets 36 months for any reason, but would have had to move back into this property and didn't move back into the property. I'm sure a good tax advisor would have told him, because actually I've already worked this one out, the question. He would have saved over £10,000 if he returned to the property for more than a month, or at least appeared to live back in the property for more than a month. You know, especially in today's day, online, this is just good tax planning. This person failed to see an accountant who was good at tax planning. But we'll do the sums as it is, and then we'll maybe discuss what he could have done. Well, it's actually just an extra 3 months, 36 months of non-occupation, just by returning. So anyway, so let's have a look then. So this is the start, and get the years right, 02, January the 1st to 31st 12. That is, hang on, so that's 02, 03, 04 and 05, 48 months. and there's no argument about that one anyway. Moved abroad to work until, and then he came back to the house, so that's okay, that's fine. So when he was abroad, hang on, and then we could do it separately, or we could do this. No, we better do it separately, otherwise it's a lot of years, and obviously examiner will be better off showing the calculations. So we turn to UK, so 01, 01, 09 to 31st, 12, and we've got to work out how many months that is. Oh, hang on, I haven't done the, I've jumped one. I missed out the working abroad. So I lived in the house in 2025. 30. Hang on until 31st of December. Hang on, get these dates right. 31st. 1, 6, 2, 31st of December. That was the 36 months. So that's the working abroad, not the 36 months that you get for any reason. And he can't claim the 36 months for any reason because he didn't move back in after this period of time. Anyway, back to this one. So this is the 09, so 9, 10, 11, 12, 17, 18, 19, 12 years. 12, 12 times 12. And he's moved into his father's house, left his own house empty. House was eventually sold. Okay, so we'll leave a gap there and then work it out because the last 9 months is deemed occupation. Eventually sold on the 31st. So we need the 01, 04, 24 to and that's the last 9 months rule, and it's this middle bit that's non-occupied. Although had he moved back in, we could have claimed another 36 months. So I get these dates right. 01, 01, 21 to 31st of December. No, December. 03, because that's 04. 24. 39, basically that was, if you work it out, that's 21, 22, 23 and 24 minus the 9 months we've already got. That's why I worked it out so quick. So the final gain, well, yeah, is well, how much did he gain first? Well, 80,000, and then we're going to divide it by the total number of months. $276, which we can add these up, or we can work it out from 02 22 to end of 24. It's 22 years. 22 years. Hang on. Or we could just add 48, 36, 144, 9 and 39 together. Either way, we'll get to the same answer. And then, in fact, we should... Oh yeah, divide by... Or it doesn't matter which way around we do it. Times 39. Or we could times by 39 and then divide by 276. It comes to the same answer. Just to prove, you could do it that way as well, to the nearest pound. And we could have reduced that to 3 months with a bit of planning by returning, but obviously nobody told the Stuart that he needs to move back, and then he can claim the 3 months. The only bit that isn't involved, we've got the working abroad, we've got the last 9 months, we've got the occupied, and we've got some non-occupation. We could have reduced that non-occupation, therefore reduce his charge down to, I think, £870. I calculated it. If somebody told the missing rule that is not in this question about the 36 months for any rule.